Occasionally, when you're watching the market, suddenly there's a very big move like the breakout. It could go either ways, either upward or downward. Like today in the crude oil futures market around 726, there's a big sell-off here. While you're wondering what's going on there, and then the market moves so fast that it's making a very huge bar, and then you don't know what to do. So in this video, I'm going to show you when to trade it and how to trade it. This is the 30-second chart for crude oil on November the 8th. So at around 7:25:30, this 30-second bar, you can see it is a sudden sell-off of 43 cents. It followed by another bear bar. So in total, these two bars, there is 67 cents down. When the market moves like this, you have the pressure to trade because there might be very good opportunities to have a profit. However, you should ask yourself, is this sell-off expected or scheduled? What I mean is that, is there an economic event like some result release on that moment? Or is this something that you're expecting to happen? Apparently, it cannot be due to some of the economic events because the timing is not correct. Normally, the result will be released at the whole o'clock or like 7 o'clock or maybe 7:30. Nothing will be released at 7:25. Another thing is that I searched on the internet to see whether there's any sudden news like something happened suddenly. I don't see that. So that's why this is not something we are expecting or scheduled. I have videos on how to trade on the sudden breakouts, but those are only for the scheduled events like the US presidential election day or maybe some interest rate decision release date. So this is not in that scope. Then you may ask, when is the best time to trade this kind of sell-off? The answer is just sit tight and then watch the market. Let the market cool down a little bit because the sudden sell-off might be followed by a sudden upward reverse. So you don't want to get into the market and then get stop out, or maybe if there's a slippage, you're gonna lose more than you are expecting. So just sit and then watch the market, let it cool down a little bit before you put your order. I have other videos on how to trade the breakouts using the 30-second bar. However, this is not the case for this chart. For this sudden sell-off, use the 5-minute chart. Back to the 5-minute chart. Before the sell-off happened, you should have already had your trend line drawn on the chart. So these are the trend lines here. It's upward wedge here, and then it's breaking the bottom trend line. And then the normally we're going to wait for the pullback and then trade on the pullback. So we're expecting something happen like this. The breaking up here and then it's pull off here. So and then you put a trade at this moment. However, it followed by the sell off. So you just wait for the bar to finish at the moment. When this bar at 7:30 finished, you can see there's a strong support at the bottom here. So you know that the trend might not go on for so far. The next bar also shows very strong support. So this is a confirmation that the support is very strong. And then after a while, you can see that there's bull bar, and bull bars, but they didn't reverse too much. Because if we take this as the first leg, it reversed roughly 50% there. So we know that there will be another leg to test the bottom of this big bear bar here. Then this bear bar can serve as a signal bar from the pullback because you can see the tail at the top is very large, and then the body leans towards the bottom of the bar. So this is a very good signal bar. So you should put your sell order at the bottom, just one tick below the bottom of this low of this bar, and then you will get into the trades in the next bar. In terms of the profit target, so there are two ways. The first is you use the exit the same as your stop. That means you put your stop at the top of this bear bar, and then you take your profit the same distance as the height of this bar plus 2 ticks. And then you will exit at this bar at roughly 81.85. The second option is, like I said before, the market probably will go down to test this low again. So you can put your target at the bottom or maybe around the low of this sell-off bar. So you can see the next bar, it tries to break the low of this, but it failed. That means this is probably will be tested again. However, normally you don't just put your target at exactly the bottom here. You need to have a few ticks above the low because the market might not go down far enough and then reverse back up. If you have two contracts, you have a few options for you to take the profit. The first is that you let the one contract to take the exit at the stop, and then the next contract will go down to the bottom of this sell-off bar. So if that's the case, right after you get filled by the first contract here, you take the profit, immediately you can move your stop from the top and to the break even if you don't want to lose the second contract. And then in the end, the second contract will break even. So you only win by the exit at the stop. It's the same as the stop for one contract. The second option is that you can wait a little bit and then let the first contract to reach 2 times the stop. And then the second contract go down to the bottom of this sell-off bar. So if that's the case, you're going to, let's say you take the profit first and then you move your, for the first contract, and then you move your stop for the next contract immediately to the break even. And then in this case, you're going to take more profit because one contract is 2 times of the stop. The second contract is at the bottom of the sell-off bar. The third option for sure is for both contracts to go to the bottom of the bar. But this case, you have to hold your stop very tight at the top of here because there's going to be a pullback to test there. So, but after a while, you can see that it goes down to the bottom here. So you have the most profit in these 3 options. So which option to choose, it really depends on your strategy and your research of the chart and understanding of the market. What if you trade in the middle of the sell-off? So I would just close my position and take the loss because that is not the setup I should be trading. I need to stick to my strategy. And for sure, the unscheduled or unexpected sell-off is not part of my strategy. So if it is not strategy, just sit tight. If you're in the middle of a trade and then you don't understand it, it's better to just take the loss and then just exit the position and then watch. Even if you are having some profit, you should ask yourself, is the profit based on your strategy or it is based on luck? So at least manage not to lose money on that position. If you enjoyed my video, please don't forget to subscribe, comment, or like. And you can also go to my channel for more videos. Thank you.